Introduction to capital gains tax. For many investors, capital gains tax is among the most confusing financial topics. Yet a basic understanding of capital gains is key to building a financial plan that reflects your goals and needs. It's important to be aware of the tax consequences of selling your assets, as doing so may significantly affect your tax return and your financial picture as a whole. What is a capital asset? Almost anything you own for personal or investment purposes may be considered a capital asset. This applies to a range of assets, including investment vehicles such as stocks and bonds, real estate, and collectibles. Capital gains resulting from the sale of these assets may be subject to capital gains tax. What is a capital gain? When a capital asset is sold, the difference between the adjusted purchase price, or the basis, of the asset and the amount for which it's sold is a capital gain or a capital loss. You incur a capital gain if you sell the asset for more than its basis. A capital gain is classified as short-term if you held the asset for 1 year or less before selling it. It is considered a long-term gain or loss if you held the asset for more than 1 year. How are capital gains taxed? Short-term capital gains are taxed at ordinary income tax rates, but long-term capital gains are taxed at lower rates. The Tax Cuts and Jobs Act of 2017 retained the existing long-term capital gains rates of 0%, 15%, and 20%. The rate at which you are taxed in 2025 will depend on your taxable income. 0% applies to individuals with taxable income of no more than $48,350, $96,700 for married couples, filing jointly. 15% applies to individuals' taxable income between $48,351 and $533,400, between $96,701 and $600,050 for married couples filing jointly. 20% capital gains rate applies for individuals with taxable income greater than $533,400, greater than $600,050 for married couples filing jointly. Special tax considerations. Keep in mind that different types of capital gains are taxed at different rates, typically depending on the asset class for which the gain was incurred. Collectibles. Long-term gains on collectibles are taxed at a maximum 28% rate, and short-term gains on collectibles are taxed as ordinary income. Items such as coins, stamps, gems, antiques, and fine art are considered collectibles. Real estate. Special exemptions apply to capital gains on real estate. If you're thinking about selling your primary home, you may qualify for tax exclusion if you meet certain criteria. Business assets. Gains on fixed assets that are used for business, such as furniture and machinery, are taxed at ordinary income. Your tax planning. Remember, your capital gains tax rate depends on a variety of factors, including your income level, when you bought and sold the asset, and changes to the tax code. We can assist you and your tax advisor in creating and implementing a comprehensive tax plan that is consistent with your financial goals and personal situation. Thank you for watching. If we can be of help, please reach out.